There is no magic pill for financial success that people like Warren Buffett and Bill Gates are using to build kind of their financial empire. Too many people think wealth comes from diversifying into companies they don't understand, or dollar cost averaging, right, which is putting your money away every month whether the market's up or down, or budgeting, which is all about scrimping and saving and sacrificing and eliminating, or even worse, speculating on things they know nothing about. The real way Bill and Warren have created their success is by buying companies, keeping control, and investing in what they know. When you only invest in what you know and buy companies rather than invest in stocks, there's actually exponential wealth. Let's look at Warren Buffett. There's a documentary out there about him, and he read a book by Ted Williams. And Ted Williams, who had 400 batting average in a year, he had this entire notion of the circle, right? And he said, if the ball isn't within the circle, if I swing for things outside of that circle, I'm gonna have a lower batting average. So it was more about the pitches he didn't swing at. And Warren Buffett says the difference between a successful investor and a highly successful investor is the highly successful investor says no a lot more, right? So he learned from one of the greatest of all time as far as hitting, Ted Williams, and it was about what he didn't swing at. In the late 90s, when everyone was putting their money in the speculation of the .com, Warren Buffett stayed on the sidelines. He said, it doesn't make sense to me. People thought he was crazy until the .bomb happened in 2000, 2001, and 2002. So it isn't about keeping busy. It isn't about working harder. It isn't about taking more chances. The hard work a lot of times is saying no to the distractions. All these distractions are gift wrapped as opportunities. All these investments sound good, but in reality, are they? If you don't understand them, don't know how they're gonna work, don't know how you're gonna benefit from them, don't know how to protect the downside and mitigate risk, it's completely different. So it's all about swinging, not swinging at most pitches, because that's gonna lower your average. See, when Warren Buffett invests, he actually buys a company. He takes controlling interest, and he has a team that implements his methodology to influence the outcomes. So it's not like he's a stock market investor, he's a company buyer. So if we all went out there and bought the same stocks as he did, it's a completely different notion of what he's up to than what the average investor is up to, where they buy a few shares and he buys that controlling interest. He's got these people that go in, and a lot of times they start looking for inefficiencies in that company. They start firing people and they start adding additional workload to other employees, right? They start doing certain things like that so they can extract a higher rate of return, and whether that's right or wrong or whether you like it or not, it's part of the way that he uses the methodology to create a much higher return than most people get. So if he's going to boost his returns, it's more about being a business owner than a stock buyer. Bill Gates has created more influence in getting what he wants and being charitable rather than even getting into politics. Bill Gates in these charities can have more influence, like when he wanted to have charter schools or we want to do these types of things, because it allowed him to meet a lot of people, and he didn't have a certain time frame where he would eventually get voted out of office, or where he didn't have to worry about go out there and raising capital just to get elected. And so these guys create a game, right? They know how to win, and they've amassed an amazing amount of wealth. And this didn't come because they were cutting back. I get it. We've heard all the stories about how frugal Warren Buffett is. Now, Bill Gates hasn't been quite as frugal, considering he sent all of his neighbors to Hawaii when he was building this extraordinary house into the kind of hillside right there on the lake out there in Washington. But, Bill Gates still lives in the original home. But at the same time, Bill Gates still flying private when he's going somewhere because his time's extraordinarily valuable. It's just that he values different things. These guys didn't get wealthy by funding retirement plans. They actually created companies, right? They took genius of what they saw in the world, and for Warren Buffett, that was allocating capital. For Bill Gates, that was creating software, and they made their money through that business. They weren't following the herd. Warren Buffett's notorious for saying, why would I follow the herd? I'm not looking for advice from all these other people that are so-called experts. He looked at his own expertise, and then he followed that. So let me break this down into 3 simple parts for you. 1, you can read hundreds of finance books, and they're not even going to mention the power of owning a business. Businesses have an opportunity for massive gains, and those massive gains that you have a lot more control over something like an index fund, a mutual fund, an exchange-traded fund. Look, I get it, there's perceived risk. There's perceived risk in starting a business, but what Warren and Bill invest in are the things that they know. They invest in companies that make sense to them. They pass on the ones that don't, and some of those might even make money, but it's really about their own investor DNA. Their investor DNA comes down to what are their core values, like what are the things that are important to them? What are their core competencies? What do they have unique expertise? And then really what are their core drivers, what are the things that they're interested in and that they want to be part of. And then they focus more than they diversify. They focus because they really dial in the things that they're very best at, and they extract the most profit from that rather than taking and spreading themselves so thin that they don't know whether something's going to work or not. They swing at the pitches they know how to hit. That's the key. The second piece is they build amazing relationship capital. Bill stayed involved in his main company, right? He continued to refine his skills and delegate the rest. Warren is incredible at allocating capital and sticks to what he's great at. There's stories of him just sitting in his office, reading articles and reading most of the day, taking a few calls here or there, because outside of allocating capital, he isn't quite the genius that we see in allocation of capital. So Warren Buffett was known to look at his calendar each day and saying, what things could I eliminate? What things can I delegate so I could do only what I do best? And what he even enjoyed, because he was still doing certain things like coding even after he was worth so much money. So what did they do? They hired amazing people. We know Charlie Munger when we're thinking about Warren Buffett and the things that he could do. You think about the management team at Berkshire Hathaway. And so it's really about sticking to what you do best, outsourcing and delegating the rest so that you bring the most power to anything that you do. Now, if you want to really dial this in your own life and figure out where are your financial strengths, right? What are the things that make most sense for you to pay attention to? Whether it's delegating and bringing in a team member of your personal finances, whether it's really understanding like what the stress test is of where your financial strengths are, that you could dial in even more. You can go to take a little assessment at wealthfactory.com/no more budgeting. wealthfactory.com/no more budgeting. You can take this financial stress test, figure out where you're strongest, and figure out what things have to be addressed, either because you outsource it, you delegate it, or you eliminate it. Now, the third piece of this, there is a methodology, there is a philosophy, and there's a reliance on their strengths when it comes to both Warren and Bill. Warren isn't getting a committee or retirement planner to tell him where to invest his money. He isn't doing index funds. He knows what is worth the money. He's got what I would call like a hurdle rate, right? If something doesn't earn a certain rate of return or have a certain amount of opportunity, then it's not worth his time. If it's something that he doesn't understand or know how it works and it doesn't make sense, he's been known to buy companies off a one-page letter that came in because it said the right things, because it made total sense to him. So, you know, like I said before, he may live in the same house and he may have even spent years walking to work, and now I guess he's upgraded a little bit because he's got this Cadillac, but it wasn't really about his frugality that allowed him to build wealth. It was through the value creation. It was through the reach. It was through the investing in things he knew. It was in the allocation of capital. It was in the number of people that were impacted. And then, yeah, when it's important things like saving time, that's when he is flying private, right? And he knows his value when it comes to his production. Bill continually looked at ways he could do only what he did best, right? Figuring what he could let go of. Figuring out the things that didn't make sense for him to do because he either wasn't unique at it or someone else could do those things, so he could bring his best knowledge to be able to deliver in the highest way. The key with both of these guys is they both have a never-ending purpose and didn't retire. They didn't retire from purpose. The vision may change with Bill working to make an impact with his nonprofit, but they're both completely active and up to major things. This is the key to wealth. Find a purpose you never want to retire from. Find something that's so compelling and even beyond your reach or wherewithal or even know-how, so that it's something that's worthy of your life, and that's what's going to deliver the most value. There is no magic pill for financial success that people like Warren Buffett and Bill Gates are using to amass their fortune, to make their impact. Too many people think wealth comes from diversifying into companies that they don't understand, or dollar cost averaging, or budgeting, or speculating on things they know nothing about. By creating a business, using the right methodology, and building great relationships, you can start down the same path towards financial independence using the principles of Warren Buffett and Bill Gates. Now, you have the knowledge to transform your thoughts into profits and build the life you love. If you're looking for more on this topic, check out my video on wealth through conversation. You'll learn the importance of values and how to spend your time. I'll see you there.